Good stuff. Jenny Horne here with me in the studio. Maybe part of the reason we see dollar firming up is China had one of their big earnings overnight, and it was a little soft. I don't know if it's necessarily connected, Jenny, but there's this whole thing where people want to buy these tech companies abroad right now instead of at home. PDD, which owns Temu, which I thought was like breaking major ground, apparently missed the report.
I feel like Temu was one of those things that it was like so buzzworthy. It was like the latest social media. It was like became like a social media phenomenon.
Their ads were really good.
Okay, yeah, but it's also like the most annoying platform ever because you have to use the app. Like you can't just ever access it from your browser. Or at least maybe that's my own. I don't know. I have no clue either. I've never purchased from Temu.
I clicked through one time to see
how cheap it is. It's crazy.
Well, it brought me to like a page that seemed like it didn't even have the stuff they were advertising for. So they're doing some sneaky stuff on there. But I thought they were doing well.
I don't think that this necessarily is indicative that they're not. They did mention though stiff competition, which I think is interesting because that was, at so many points.
Yeah, that's looking at us right there, right?
Yeah.
Other than Alibaba and others, obviously, but
that's us. I
Costco, like, Walmart,
right, and like
Amazon.
Your Sheins, like your like fast, like very fast fashion, like. Just the mass-produced but cheap is competing in this market. More so, I think that there's this consumerism that's been felt by so many companies that are consumers just trying to get the best deal, and that was what I think drove a lot of the enthusiasm.
I thought that's why they would be doing so good.
Well, apparently not, because we did see earnings actually missed, revenue missed, and revenue increased 24%.
Oh, okay. Well, there we go.
I know, and so I was actually reading that figure was disappointing. That pace of growth, many were saying wasn't good enough. Which, hey, 24% to me. I know that they're facing relatively easier comps, but all things considered,
impressive.
I know, and I think there wasn't even anything to be concerned of now moving forward, despite the fact that we have seen still consumer spending and the extent in which it hasn't come back way on some of these Chinese companies, but obviously not as of late. They did say that intensified competition was a concern, as well as some slowed acceleration in penetrating the online e-commerce market. So I think that's also interesting that apparently Temu is not doing as well as maybe we thought.
Well, there's definitely a lot of growth there. I guess maybe just the calculus is not adding up for investors looking at the bottom line versus the top line, because the top line seems pretty good for Temu. So, got to say, even with the strength of some of our online businesses here, 25% for e-commerce right now is really good. That's definitely a disruptor type of growth rate. So, I'm a little surprised that it's down.
So right now, I also think that there's this somewhat pessimism related to the fact that Temu has been facing now pretty substantial scrutiny here in the U.S. And so with right now, I think that still being a pretty major overhang. And I will say, looking at some of its competition, Alibaba, JD.com, we know that right now attracting customers with low prices sure is a way to drive this focus. But Alibaba also did post its fastest pace of revenue growth since late 2023, which then almost makes me say, hey, wait a second, if that's what's being criticized about this report, maybe they're just losing market share to Alibaba. And look at that. We know who's beating, one or the other on a year. Alibaba's chart this year is phenomenal.
Yeah, okay. So there's other options in China for sure. Right. A lot of the charts look a lot better. I think there's probably a lot of people who were playing the rotation trade in China through PDD and are probably very frustrated. So I guess maybe an example of why to use broader baskets. Let's talk some U.S. stuff real quick. Tesla, another analyst cutting their expectations.
Yes, and this analyst wasn't. I'm almost curious, like, are they just negative on like the auto situation? Are they negative on EVs? No, they're not. So this analyst out of Piper Sandler, Alexander Potter.
450. Wake me up when it's bearish.
450, 500 from $500 with now, an overweight rating. They basically said nothing's changed in the world of transportation and energy markets, but they do cut their 2025 delivery expectations, saying that quarter-to-date trends right now may prompt others to follow suit. But they do not actually think politics are to blame. I actually thought a more interesting note was out of TD Cowen yesterday that highlighted they actually believe conservative Tesla buyers will become a great niche market for them. And they don't think that these headlines of like people lighting their Cybertrucks on fire indicate overall appetite for these vehicles.
That's what kind of I was always pushing back on to Ross Gerber, who was saying, they've kept, he isolated all of his West Coast buyers, his liberal Democrat buyers. It's like, well, okay, isn't the country like split? And doesn't that mean if that logic is true, then all the other side will like it?
I think it's like it's just a statistics game. You have 50% of your country.
But it also depends on who's got the more money to spend it. So
it does.
Ross Gerber's point might have some validity there. But
the people in California they're doing fine. But I think that you have statistics. I think you consider like what percentage of people live in urban areas that are Republican or Democrat that are buying Tesla. Like
sure,
you can figure out
why.
I think that the narrative of everyone's lighting their Teslas on fire is ridiculous and I think like shameful.
Yeah. Well, that was pretty crazy though, that video of those burning in Vegas. All right.
No, pretty terrible. But I think like the whole situation is shameful. Like, get a grip.
I think that whole discussion as a catalyst for the stock is so overstated. By the way, like I feel
like it's a distraction. It's like the way right now that the bears want to say, hey, like look at how distracted Musk is. Look at how Tesla dealerships are on fire.
Yeah, I don't know what evidence that is. It seems like he's pretty capable at multitasking. The other thing, too, is that the whole presidential premium that it was getting was about, like, policy and access to power. Not that, like, people who vote Republican are going to buy Teslas. So, all right. Interesting that the analyst is saying that. Appreciate it. Thanks for keeping us posted. I love when the price target cuts are still $200 above where the stock trades. All right. Appreciate it. Thanks, Jenny.